So you got to know what the pink and blue triangles are, but just for example's sake, there's when real-time imbalances of sellers who want to sell it versus buyers who want to buy it becomes extreme in real time within a few ticks of the last traded price. It's not orders that are filled, it's orders who might want to get filled but haven't yet, close to the last traded price, so they're serious, and out of balance versus what? In order to find value and make the determination that there's a lot of sellers, you have to compare it to something. And if there's a lot of sellers and a lot of buyers, then there's not a lot of sellers, is there? So in order to say there's a lot of sellers, you're comparing it to the fact that there isn't a lot of buyers. Now you could say there's a lot of sellers. And that's what these pink and blue triangles do. Pink for a bit of a sell extreme of the people who want to sell it with their order close to the last traded price. Therefore, the price comes up to it and should walk away from it and respect it and head down. Now, here's the unique part about this particular instance. We also had the same example down in here in the NASDAQ. So this upper chart is the ES on a footprint. This lower chart right below it is the NASDAQ on a footprint. The triangles come in within 10 or 15 seconds of each other. And I'll play it so you see it in real time. So the market in context is doing what? It's rallying. Nice rally in the NASDAQ, nice rally here in the ES. And most people on a rally, if they're long, are looking for a place to qualify and take their profit. If they're not long and they're looking to fade, they're looking to open up a short. But if most people get anxious when they see a move, whether they're in the market or think they should have been in the market. So if you're looking to qualify a place to get in short or get out of a long, you see an imbalance of selling is what you want to see. But now to see it in an ancillary market where these two equity indexes influence each other for obvious reasons, as we're rolling through with this newer feature on the Puke tool, could carry a little bit more weight. And you could see it become, and I've seen this a couple times already, as I fast forward it now, the dead high for this particular move, and it rolls off. So it's a pretty nice swing high that if indeed you've seen it in both markets and you were long and you covered here, you feel pretty good about it because it broke 20 handles from there in the NASDAQ and 4 or 5 handles down in the ES. A little bit more weight to sell imbalances coming in two related markets, in this case, the ES and the NASDAQ on the futures side. Always when you're watching my videos and YouTube channel, understand there's not a lot of information on this screen, even though it looks like there is. It's the appropriate information. It's the relevant information. It's other people's positions or orders that are relevant to being big or being out of whack and showing an imbalance. But it's relevant. It's not math. It's not all these averages. It's where people are long or short from compared to how many longs versus shorts. You always have to compare something to something else in order to find value. Everyone knows that because you've done it your whole life when you buy and sell anything. So most people, when they open up a trading account, ignore the same technique that they've survived on in trying to determine if the car or the house or the plane ticket that they buy is too expensive or maybe cheap. But when people run into the market, you have to be able to also separate, are they filled or not filled? Both are important, but even more important when you could distinguish between or certainly understand the differences of the two. Because people who want to get filled and are serious, and there's many more of them than those who want to get filled on the buy side, good chance the price is going to go down. And why do we say they're serious? Because we're analyzing stuff that's very close to the last traded price. The example I give is someone selling their house for 500,000. Someone says, "Hey, I'll offer 250." They're not serious. They're not going to get a return call. But if they say, "Hey, I'll bid 498," they're serious. Closer you are to the last traded price, the more serious you are with the order that you're putting in. And that's the analysis that we're doing, then comparing each side in real time to find when there's a flash of an extreme in the ES or the NASDAQ. And then you see these triangles. It's also not orders that have been sitting there. So it's not something everybody else could see because we're taking new orders that are coming in as price gets close to that particular zone, that spot. And no matter how long you've been trading, no matter what kind of success you might have or haven't had, everybody's weakness or area in their trading that they could get better or need to even start getting good at it is real time analysis. People who don't want to take the time to read the real time is because they never were in front of tools that help them do it, or they try to do it, they can't figure it out, so then they just back out. So, well, I'll just find a better zone and a better price based on information that's already happened because they can't do it. Therefore, they'll never have consistent good locations. They'll try to have consistent good opinions as to where price is going to go, but not good qualification mechanics or techniques. Because it's not about being right, it's about when you're right and how good you are at being wrong. And it's always about good location. The definition of good location is how long does price take before it starts going in the direction you thought it was going to go. You open a position, does it take seconds, minutes, hours for it to finally start to pay you? But keep an eye on these triangles and these videos with respect to the extreme in real time and getting people away from having to stare at a bunch of numbers coming in and out on a dome and or footprint, taking the important information on what otherwise is some pretty complicated and complex numbers and info and stripping out to what's important and leaving the rest to those who donate.